This week's guest is a name that you're probably familiar with. He is the author of the mega popular book, Tax-Free Wealth. He is Robert Kiyosaki's Rich Dad tax advisor, and he's also been the advisor with whom I have had my own taxes done through for more than 10 years by leveraging his Wealth Ability Network. Welcome back to Get Rich Education, Tom Wheelwright.
Thanks so much, Keith. Always good to be with you and your outstanding listeners.
Oh, yeah. You know, it's always so enlightening here, Tom, because this tax stuff changes so frequently, sometimes for the not so good for most people. When you were last year with us, we talked about the potential for a bunch of these Biden tax hikes on both the income tax side and the capital gains tax side. But, you know, some Biden proposals can be of benefit to us. You've often told us how really the IRS code, and it's several thousand pages, is really just a roadmap of incentives. And some of these Biden proposals actually give us incentives on the tax advantages of investing in green energy real estate. So tell us more about that.
You know, there actually are already tax credits for green energy real estate, particularly solar. But there's, you know, this is the thing. Whatever the government wants to do, they're going to incentivize people to do it through tax incentives. And when it comes to the Biden proposals, where there are all sorts of enhanced and increased tax benefits for credits and deductions that are maybe already in the law, and they've just taken the cap off or they've just pushed them to another level.
Now, I know in the recent past, when someone thought about incentives for investing in energy, an awful lot of tax incentives invested for those that invest in oil, especially direct drilling projects, for example. But are we looking at a climate where there are going to be fewer of those, and we're going to have more of these sort of solar and wind and maybe car charging stations and incentives related to those?
I don't think there's any question. You know, the oil and gas tax benefits, which include intangible drilling costs and depletion allowances, right, and so forth, they've been on the chopping block for many years. You know, all 8 years that President Obama Barack Obama was president, they were on the chopping block. Never happened. Now, however, it seems like we have this big push towards clean energy, or so-called clean energy, big push away from what they consider to be polluting energy to green energy. I mean, that's a question to me of semantics, but it's, you know, low emissions, okay, or no emissions, let's put it that way. And so, yes, there is actually a proposal, again, to eliminate the oil and gas tax deductions, but instead to increase the solar tax benefits, which are pretty significant already. And on top of that, add tax credits for charging stations. Maybe they might even give Tesla back their $7,500 credit for buying an electric car. I think that there's going to be tax credits for hydrogen, for geothermal, for wind. There's even in Biden's proposal a tax benefit for nuclear, even though you can't build nuclear in the U.S., but there are tax benefits for nuclear, which I find most interesting because first time I've ever had nuclear lumped in with clean energy. I find that fascinating. But there are just an enormous number of proposals, and I think some of these are going to go through. But if you like, we could talk a little bit about the solar tax benefit, because I think it's a big one already today that is ignored by a lot of people because they don't understand how much they could actually benefit from putting solar on their existing properties.
Yeah, let's talk about that, because when a lot of people think about green energy and real estate, maybe solar panels on a roof is one of the first things that comes to mind. But tell us if it goes beyond that, and if this only applies to primary residences or income properties.
Well, here's the thing. Primary residences, they get this credit, right? It's currently 26%. Biden wants it to go back up to 30%, which is where it was. For commercial properties, you not only get the 26% credit, but you actually get a deduction for 87% of the cost of the solar panels, of the solar equipment. So let me give you an example. Let's say that you're in a 40% tax bracket. The end result of that is that you're only putting up $38 for every $100 of investment in solar. The government's putting up $62. Well, so let's translate that in. What if you were able to leverage that and you only put down $25, but you got a $68, $62 tax benefit, you'd actually make money. So I think that people have been focused too much, frankly, on, okay, well, solar, the return on investment's not that high. Okay. In some places it's not. I will tell you, Arizona, I have a bunch of solar panels on my roof. I actually built a roof to hold the solar panels. And it's actually been a really good investment. So it really depends on location and all that kind of stuff, just like any other real estate, right? It's location, location, location. But remember, if you've got, for example, a commercial property or a multifamily property that has covered parking, you could put solar on top of the roofs of that covered parking. If you have a flat roofed building, you could put solar on top of that flat roof building without really a lot of changes to the actual, parking structure or the building itself, because solar panels are not that heavy. So I think that there are going to be more and more incentives and more benefits to doing solar, on your properties. And I think that's something to be thinking about. Let's say you have convenience stores. All those convenience stores, the filling stations have flat roofs covering the filling stations, right? Well, why not put solar on that flat roof that's covering the filling station? Why not add charging stations to your filling station? So people are going to be using going to be using gasoline for many, many years to come. No matter what anybody wants, they're going to be using gasoline for many, many years to come. But that doesn't mean you couldn't have charging stations. Doesn't mean you couldn't have charging stations and a restaurant. So perhaps, or some place for them to get, or a coffee shop. So, I would look at this as a business and say, okay, I already have real estate, or I'm looking at investing in real estate. How do I supercharge that real estate with the tax and income benefits of clean energy?
Yeah, that's interesting. So you talked about some of the incentives, for example, with installing solar panels. Is that actually, in most cases, reducing the monthly energy bill for that property owner at the same time?
Well, exactly. And that's actually where the government gets their money back, right? Because that's a lower deduction from your income. And so the government actually gets paid back. So remember, all of these incentives, the government gets as much out of them as the taxpayers do. Okay. They're not doing this just for the good of rich people. Never. In fact, I'll tell you, the only government incentive that the government doesn't get anything financially back from is retirement plans, qualified retirement plans, which, by the way, apply only to the middle class, primarily the middle class, right? So, rich people don't use qualified retirement plans very much. So it's really ironic that the one thing the government doesn't get money back from is the one thing that people seem to use the most. And yet all of these other incentives, whether it be energy or real estate, housing, agriculture, all of these have tremendous tax benefit, yes, but the government actually makes pretty good money on them as well.
Yeah, no, I think it's a separate discussion on whether solar is really efficient from an energy density standpoint versus petroleum products or something. That's its own discussion. But if the addition of solar panels truly reduces the utility cost for that property owner or that business owner, therefore it could increase the value of the property, because a lower utility bill, of course, increases your cash flow and your NOI and therefore your valuation.
Well, let me give you my own personal example. Our summer utility bills, I'm in Arizona, 110 degrees outside right now. Our utility bills can be upwards of $1,000 or more just on our home. Since we put the solar panels up, our utility bills are never more than $500 a month. Now, $500 a month in the summer probably seems like a lot to you, Keith, in Alaska, right. But in Arizona, on a large home like ours is, $500 a month is nothing, and $1,000 a month is easy. So I've been shocked actually at how good the return on investment's been. Now, it's not 20% like real estate, okay? But when you combine it with, by the way, you combine it with the tax incentives, it actually produces a pretty decent return.
Yeah, this is really interesting. And, it's really been more of this gradual cultural shift into what people in the investment world have called ESG investing, environmental, social governance. Is that is what the acronym stands for. And really, that just is really this conscientiousness for the welfare of others and investing with that in mind, green energy just being part of that. So Tom, specifically with real estate, are there any other green energy incentives that are really helpful, either through Biden tax proposals or just reducing one's expenses?
There are tax benefits for hydrogen. There are tax benefits for wind. You know, for example, let's say you have a ranch, or you have some real estate and you put some windmills on it, right? There are tax benefits there. Any kind of renewable energy, even bioenergy, right? Like ethanol, there are tax benefits for this. So what I would suggest is, don't think that it's just oil and gas. All we hear about, like you say, Keith, is oil and gas, oil and gas, oil and gas. What we don't often realize is how many tax benefits there are for renewable energy and so-called clean energy. And on top of that, you know, the current administration, they really want to push this. So I think that's actually something that is likely to happen, that we're going to get some increases to the tax benefits, because one of the things that's holding back the electric car industry, of course, charging stations. There are some states who've done a remarkable job. Oklahoma has done a remarkable job with its tax credits to encourage investing in charging stations. And now I understand that they have the highest number of charging stations per capita in the United States. Oklahoma, which is thought of as an oil state, right? So states are doing this. But what we're going to see is we're going to see the federal government doing it. Some states are doing it more than others. And this is a matter of sitting down with your tax advisor. And if this is the type of investing you want to do, there are huge tax benefits for doing it.
I think it's important to keep this sort of cultural shift, like I've alluded to, in mind for our viewers and listeners here. It really doesn't matter that much about what you think about oil or not, you being the listener here. For example, the price of a barrel of oil dropped from $100 down to $50 a barrel in 2014. It's since risen up to 75. You know, oil prices are always volatile. If you own your real estate in an oil-centric market, you've got to start asking yourself some really key questions these days. We often talk here at GRE about how the market's more important than the property. And increasingly, you see more and more people, more investors and more everyday consumers and individuals say, hey, JP Morgan Chase, hey, Wells Fargo, hey, Bank of America, we're not going to do business with you anymore if you continue to finance oil exploration projects with BP or ConocoPhillips or things like that. So it's really important to understand sort of the cultural shift that we're potentially seeing now from oil and petrochemicals over into what's considered more green energy. Whether that's always better for the environment or not, sometimes that's not the point. That's just emblematic of this shift that we're seeing.
No, I agree. And if you really want to understand what the government priorities are, look at their proposals in tax legislation, because the government always starts with taxes. That's where they begin. They might do a little bit in terms of regulation, but the first major shift is always going to be in tax benefits. So it's not like we're ever going to lose tax incentives. It's just that tax incentives will shift.
Yeah.
Okay. So it's just like you say, you know, I'm agnostic in a lot of cases. I may be, you may be agnostic when it comes to oil, or you may be agnostic when it comes to clean energy, or you may be one of these people who says, well, it's not really clean because think of all the disposal problems with the batteries, or disposal problems with the solar, or how the solar is made. That's why I call it so-called green energy, just recognizing that there are also environmental challenges with any kind of energy production until we get to maybe the geothermal type stuff. But for now, we're always going to have those questions. The real question is, where do you want to put your money? Okay. And what do you care about? And if you go, well, look, what I really want is I want lower taxes and a higher return. Well, that's one way of investing. Again, if that's the case, then look where the government's going, look where the market's going. If you want to say, well, I really care about this, then put your money there too. You know, we do vote with our dollars, and let's not forget that.
So are there any last things that someone really needs to know if they want to take advantage of these green energy incentives, which are still relatively nascent?
Well, what I would do, Keith, is I sit down with a really good tax advisor, and who can just walk through not just the specific tax incentives, but the actual making sure that you are doing the tax incentives that work for you, right? So for example, I mean, oil's long been a great tax benefit, but it may not be the right investment for you. Okay. Or low income housing has great tax credits, but it may not be the right investment for you. So you want to make sure that you take a holistic approach. You want to make sure that you're looking long-term, not just short-term, and make sure that you are kind of watching how the government is going and how the markets are going. Just like you always talk about on Get Rich Education, Keith, always got to follow those markets. And what you're going to see is where the markets go, probably the tax benefits are going as well.
Yeah, that's 100% right. Well, Tom, you've been great at, I think, just building an awareness for people that, once you have real estate, now you control something. Now you have options, and how they can leverage those options in green energy might just be a new way for people to do that. If they want to learn more in you and your network of advisors and the best place for them to get started on it, what is the best way for them to connect with you?
Well, obviously the first thing to do is read my book, Tax Free Wealth. The second thing to do is go to wealthability.com and schedule a consultation with our people and see if there's a way we might be able to help you. Sometimes people just outgrow their accountant. Sometimes their accountant was really good when they were doing one thing, and now they're starting to invest different ways. When they were in the stock market and doing a 401k, their accountant was fine. Now they're in real estate. Now they're in clean energy. Maybe their same accountant doesn't work for that because they don't have the knowledge that they need. So that's why we developed our Wealthability Network, is so that we can train the accountants. That's our job. And by the way, if you have an accountant that you love, that is great, but your accountant, you go, I'd really like them to understand this stuff, send them our way. We will be happy to train your accountant as well. So that's still another option. It all starts with wealthability.com.
Yeah, that's great. You bring up such an important thing for an investor to keep in mind, Tom. Sometimes people outgrow their accountant. They've added more properties. They've taken an interest in something else. And typically an accountant is not incentivized to tell their client, hey, you know what? I'm sorry. I don't think I can help you anymore. You're growing too big.
No, it does happen. It actually happens a lot. And we do end up with a lot of those people because they go, you know what? I love what you're saying, Tom. I love what Keith says. But guess what? My accountant just is not comfortable with those things. And that's not a knock on your accountant. They just need, we all need to do what we're good at. And whether that's real estate or whether it's business or whether it's tax, we need to stick with what we're good at and sometimes we just need to upgrade.
That's right. You can learn more again at wealthability.com. Tom Wheelwright, it's been valuable. As always, thanks so much for coming back onto the show.
Thanks for having me, Keith. Great to be with you.